Marvell dropped 14.7%, and everyone is panicking. The key signal shows Marvell is down only 12 points from its recent high, a trivial wobble. That modest dip barely scratches its multi-year growth trajectory anchored by booming data center orders. But the lab score is 80 out of 100, strong buy. Here's why the sell-off is wrong. MRVL plummeted 14.73% today as custom ASIC. Competition threatens its 1.6 terabit per second optical DSP dominance. While Wall Street panicked over ByteDance, the real threat is Broadcom's superior packaging yield. Marvell relies on TSMC's 3nm N3E node for its custom AI accelerator silicon. However, interconnect latency remains bottlenecked by packaging limits. Broadcom's co-packaged optics bypass this bottleneck by integrating the optical engine directly onto the switch die. This hardware edge directly squeezes Marvell's design margins. Today's drop to $246.31 reflects the market realizing Marvell's custom silicon moat is evaporating. Quarterly financials showing modest revenue momentum for Marvell. MRVL just cratered 14.7% because its moat is evaporating. By Q4 2026, geopolitical friction will compress margins 400 basis points. While the Fed holds rates at 3.63% and CPI, Consumer Price Index, the inflation gauge, is 0.6%, the friction is structural. Trade war rhetoric and tariff uncertainty are forcing a capital rotation out of infrastructure nodes like ALAB, down 7.9%, and VRT, down 6%. Wall Street missed the shift, but the ByteDance deal proves that Qualcomm is weaponizing scale to cannibalize Marvell's custom ASIC, application-specific integrated circuit, which is a chip designed for one specialized task. With a 6.7% recession risk, the market is repricing the AI hardware stack. The battle for the silicon reticle, this is the physical mask used for chip printing, has begun. Marvell reported earnings per share of $0.80, missing the Wall Street estimate of $0.81 by 0.9%, a miss that raises questions about near-term guidance. Marvell, custom ASIC networking, is trending higher at 246. Management's headline this quarter: multi-year cycles of AI infrastructure development. 3 words designed to make you feel visibility is locked. What they're not saying: this is a backlog business, not a spot market one. Insiders net sold 255,060 shares in 90 days. Historically, that precedes a 12-month revenue deceleration. EPS missed by 0.9%, ending a 4-quarter beat streak, while R&D as a percent of revenue climbed to 25.3%, a signal of pipeline expansion, but also margin compression. The silicon reality: Marvell's custom ASICs for Celestial are still 18 months from volume, and TSMC's CoWoS yield, chip-on-wafer packaging yield, how many dies TSMC can stack per wafer, is the bottleneck no one names. What management is saying is confidence. The momentum breakdown for Marvell: RSI sits at 62, pointing to bullish momentum, with buyers in control. MACD is currently bullish, with the histogram crossing above 0. MRVL is down 12.5% today as the market flushes AI infrastructure, creating a high-conviction entry for the optical transition. Marvell dominates this bottleneck with Nova 1.6 TPAM 4 DSPs, digital signal processors that convert light to data, and a custom ASIC, application-specific integrated circuit, pipeline. But here is what breaks the thesis. If TSMC's 3nm node, the advanced process node required for these designs, sees yield drops, Marvell has no physical fallback for Orion silicon. While our previous buys at $290.79 are underwater by 15.3%, the 80 out of 100 AI score confirms this dip is a buy. If Marvell maintains support at $164.50 through the late 2026 custom silicon ramp, we target $316.43. Failure to deliver these hyperscale chips triggers a total exit. Marvell's 5nm PAM4 DSP die just hit 90% yield at TSMC. That's the margin inflection Wall Street keeps missing. Is Marvell Technology Incorporated a buy at current levels or a trap? Let's hear your thesis below. This isn't financial advice. We're engineers breaking down the hardware, not selling tickets. Markets move fast, data decays faster, and past performance is just history with a ticker. Do your own research, run your own models, and trade at your own risk. The lab's out. See you in the next deep dive.